What's going on, everybody? Welcome to another edition of Weeds Weekly. It is January the 20th, 2025, and we are also now going to be known as the Mortgage Mouth. Yep, you heard it here first. That's the new brand I am launching. So you're going to actually see the videos coming to you from a YouTube channel going forward. I'm going to be rebranding myself under the Mortgage Mouth. Hope you all like it. Always encourage any feedback. But as always, what we're going to do here is every week I'm going to continue to bring you what happened this past week, what is going to happen this week. We're going to talk about a couple topics this week. It no longer matters. What does that mean to credit scores? And we're also going to talk about we're not building rockets, right? We're just trying to buy houses. So let's talk about what happened last week. How do you spell relief? It's CPI, the Consumer Price Index. We've been talking about this for years now. Inflation, inflation, inflation. And with a good CPI reading that came in below forecast, traders obviously presume that long-term inflation is coming under control. That's a great thing, because what we have had, as we discussed last week, we've been kind of in this orbit on this plane ride, just circling, waiting for the plane to come down. We're finally getting some relief. It pushed rates below 7%. And we have not seen that since the first few days of January. It pushed the 10-year treasury. I think now it's settled today below 4.6. And we haven't been there for quite some time as well. We were getting very close to our highs from October of 2023, where we saw 4.8% on the 10-year treasury. And we were looking at interest rates near 8%. So that was great news this past week. The other thing we saw this past week was build, baby, build. Optimism is running strong. It continues to run strong with the new administration coming in, which happened yesterday, which was inauguration day. We're going to touch on that next. But again, housing starts, building permits, great news for all of us in the real estate space, right? It's going to create more inventory. And the thing that really shines is that the optimism is there. And if the builders believe that there's pent-up demand, then there obviously is. They're pretty much on the ball when it comes to stuff like that. So what do we have this week? Obviously, as I just said, we got the inauguration day, right? The second Trump administration is now in effect. And what we're seeing is a ton of optimism. But with that, like I said in my forecast for 2025, we are going to see a very bumpy ride in Q1. You're going to get a lot of positives. You're then going to get a lot of lows, and you're going to get a lot of highs. So as I say, always be ready to lock in those valleys. And yes, I'm standing in the jungle today for anyone that's wondering. I am here in Austin. Will I be next week? I'm trying to think. Yes, I will be at the start of next week. I will still be in Austin, but I will also be jumping on a plane. But anyway, back to the task at hand. The other thing that we really saw is I was concerned about tariffs for this week. That was one thing that I really pointed out in this newsletter is what is going to happen with tariffs, because tariffs could mean inflation, could mean traders get a little bit uncertain of what that effect that could have, and that could push inflation up. What we saw is Trump has actually kicked that can down the road to February 1st. He's allowing both Mexico and Canada to make big decisions on what they really want to do regarding policy with immigration and things of that nature, using it as a political tool to get the things that he wants. But at the end of the day, make no mistake about it, I don't think he's going to hesitate to use those tariffs. But given the fact that he's kicked the can down the road, we can breathe easy that I think this week and next week, we're going to get a good opportunity to have some very favorable rates. So once again, if you have clients that are sitting there, that have a house under contract, make sure that they take a look at locking. I think it's a really critical time to make those decisions, because come February 1st, once again, we could be back to uncertainty and we could see some quick moves that push rates up. The other thing is we have manufacturing and services PMI coming at us this week. Again, something that's a little bit inflationary. We're going to see what the manufacturing side says. Is that going to be picking up? I think we're going to see a little optimism there. Although I don't think that they're going to be big market movers. It's just another indication of where inflation is kind of headed. So something to keep our eye on. One big thing that I did see is on January 7th, the CFPB pushed out that they are no longer going to have medical bills on credit reports. To me, that is huge information. That affects roughly what they're indicating over about 15 million people. And yeah, you may be saying to yourself, I don't have clients that have medical concerns. I don't have clients that have medical bills. And that's great if you're not dealing in that. But a lot of times we don't know. I don't know. People don't disclose it to me until they get to the table at the end. And then they're like, well, you're going to see this medical bill, or I have this, or I haven't paid it. More often than not, it really comes in the form of somebody that's had a medical emergency in the past, their inability to pay that bill, it is still on there, it's showing late payments, it's affecting that credit score. So my point to all of us out there is, don't be afraid to go through your Rolodex. Maybe somebody in the past that maybe had some credit issues could have been related to medical. That no longer is going to affect them, and that's going to take effect right away. I think it will probably spill over to our credit reports in about 30 days. But it also is another thing that you could market to. It's another touch to potential clients. It's something else that you can talk about of your knowledge of the real estate space and what is going on. So I thought that was a great tip to share. And then lastly, we're not building rockets, right? I say it to clients all the time. I just had a great meeting with clients over the weekend, and I use that exact verbiage. Look, we are not building rockets. We're just trying to buy a house. And that's easy. That's easy compared to building a rocket. So again, it just comes with being prepared. And one thing we can do is, typically as real estate agents, we don't like to get into the fray of financing. But in being the best agents that we are, it doesn't hurt to tell our clients the best way to shop for a mortgage. As we're handing out those 3 potential cards to give them an opportunity to shop, the people that we worked with before, and I truly, I raise my hand, would love to be one of the cards that you're handing out. But what are the things that you want to look for when you're giving your client information in regards to shopping? These are the things that only we mortgage professionals can control. I sat down with clients again. I had other ones over the weekend. They're giving me a loan estimate. They're asking me all these questions on the loan estimate. We as mortgage professionals only affect about 6 things on that loan estimate. We don't get into the title space. Appraisal fees are kind of set, so on and so forth. So these are the things that I like to tell clients. Look, if you're going to shop, here's the questions you need to ask. Number 1, do you charge an application fee? And if they do charge an application fee, what I typically will tell somebody is run. An application fee is a BS fee. It is not a fee that you should be paying. If you're paying that, that is totally old school. It is not something that your client should be paying, and you should not be encouraging your client to use that lender. Number 2 is points. The only time that any client should ever be paying points is if they're getting a better interest rate, period. That's what points should be used for. The third thing would be an origination fee. Same thing. Once again, it is an unnecessary fee. It is a fee that is made up. You'll get a mortgage professional telling you it's for X, Y, and Z. At the end of the day, it's a bunch of BS. And if you are paying an origination fee to a mortgage lender, you better be getting a better interest rate for it. Number 4, what's the underwriting fee? Everybody's going to have it. Every bank's going to have an underwriting fee. That fee is going to vary from about $700 to $1,200. You just want to ensure that you're not grossly overpaying. But please keep in mind for your client that if they're paying a slightly higher underwriting fee, it's probably because they're going to the best bank that has the best rate for that client. The 5th one is your processing fee. Typically, every lender is going to have this fee as well. We do pay people to process these loans, push all the paperwork that's going, collect all the documentation, upload it to the LOS system, and so on and so forth. But you just want to be clear on what that fee is. It's about a $400 to $700 fee. And then the last thing is the rate, right? What is the interest rate? And the best advice you can give to the client is, as they're shopping, make sure that they're comparing apples to apples. When somebody gets talking to me, I'm going to be talking, I may be saying something different than the other person that they're talking to, and it can get quite confusing for that client. So typically what I tell them is like, look, go ahead and shop me. Just make sure you're telling the person that it's the same purchase price, the same loan amount, the same down payment, and the same FICO. It's the only way to shop apples to apples. And I say that these are the 6 fees because it's the only 6 things that we can actually control. So when you're having your client shop, they should just shoot an email and say, hey, ask these 6 fees. What are the 6 fees? What's your rate? Do you have a processing fee? What's your underwriting fee, origination fee? Are there any points? And are you charging an application fee? It'll allow them to make the best financial decision possible. And to boot, you're gonna be a hero. All right, everybody, stay warm. We had some snow last night. It's always funny to me coming from Michigan and from the Northeast. I'm originally from upstate New York where we get so much snow. It's ungodly. However, and it's cold, cold, cold. It's so funny to see an inch or two every post that I know of people in Austin making posts about what's going on here in locally here in the state. And I think it's always funny to see that, just knowing that it all melted away this afternoon with sunshine and 40-degree weather. All right, y'all, have a great week. You need anything, you need a flyer, you need me to run an estimate, you want me to do a rate comparison, you want me to have a chat with your client for a pre-approval, please don't hesitate to give me a call, text, or email. And don't forget the new brand, The Mortgage Mouth. Please take a look at my YouTube page. Would love a subscription. And I'll be coming to you on the daily with a daily dose on that channel. And I'll be uploading all my weekly content as well as my Friday wrap up. All right, y'all, have a great week. Stay safe out there, stay warm, and I'll talk to you on Friday. Cheers.